A very good evening, ladies and gentlemen, from wherever you're watching us from, and welcome to the Vuka Investors webinar right now, right here, and we start at this moment. So, Vuka is your true pathway to investing in regulated income and in real estate. In this era where we have had a lot of things, as you very well know on the papers and everywhere else, you want to be with your true partner. And this is your home to be. Thank you so much once again and welcome. Tonight, we're going to take a deep dive into how Vuka is unblocking new opportunities for structured investments, REITs, and sustainable financing right here in Kenya. In 2019, Acorn promoters of Vuka made history by issuing Kenya's first green bond, setting the pace and the stage for innovative real estate financing. So today we continue on that journey with the founder and management team of Vuka. And they will be telling us and taking us through the platform's performance, investment opportunities, and the true future of real estate-backed securities. In about a minute or so stay tuned right away. I'll be calling in our speakers one at a time, and we are more than ready. Thank you so much for that moment. Without further ado, allow me to introduce Edward. And before he comes in, allow me to just say a few things about him. So Edward is the founder and chief executive officer of Acorn Holdings Limited. He has about 28 years experience in the real estate. That is not a small number. Some of you who are watching and are investors are about that age. So Acorn Holdings is focused on developing and managing high quality and affordable rental housing here in Kenya, starting with purpose-built student accommodations for university and college students. And I'm sure most of us have come across some of these iconic buildings. In October 2019, Edward led Acorn to issue the first green housing bond in Africa, which in January 2020 became the first green bond to be listed on the Nairobi Securities Exchange. And then after the first Kenya shilling bond listed at the London Stock Exchange. And subsequently, in February 2021, he again led Acorn to successfully launching the Acorn Student Accommodation D-Rate and the I-Rate with a combined asset under management of 7.5 billion. Now, the rates are managed by Acorn Investment Management Limited, a wholly owned subsidiary of Acorn Holdings Limited. Edward is also the founder chairman of the REITs Association of Kenya, a role he has served until October 2020, and he is actively involved in developing avenues for sustainable investments in affordable housing through the capital markets. Ladies and gentlemen, please welcome Edward Kirade. Karibu sana.
Thank you very much for the introduction, and good evening all. It's a real pleasure to be with you here and to have this webinar, the opportunity for this webinar. I don't get a lot of opportunities to do this, so it's always good to get an opportunity to do so. So before I get into my presentation, I think Maina had referred to the program for the day. So we'll start with me setting the scene and get into my first session, and then Peter, Matthew, and Elvis will come on a little later, and we have a Q&A at the end where we'll be able to answer your questions if you have some. So I guess for me, setting off, one of the things I like to talk about is the capital markets as an engine for wealth creation. A few of you will have heard me discuss this. It's been a passion for the last decade or so, traveling around the world and seeing how other countries build wealth through the capital markets. As a result, it's been something that I like to just remind us of every time I get the opportunity to speak about what we do. So I really like to start there. And I just, if you look at the U.S. capital market, I spoke on the New York Stock Exchange in November of 2022. And, when I was there, I picked up quite a few interesting facts about the U.S. capital markets. First, they are the heart of wealth creation in America. And it's not normally very visible. Of course, when you watch CNN, you will see, they have a lot of news on business news, on the Dow, on the indexes. But for most of us, we don't kind of relate back to that to retail investors. Now, if you look in America, this is 2018 data, so it's a bit dated, but 56 million US households hold or held at least one US mutual fund. There were more than 2,800 registered brokers advising retail investors, and together were advising 3.6 trillion in assets. 43 million US households hold a retirement or brokerage account as at 2018. And there are more than 7,600 registered investment advisors in the US who together manage collectively 12 trillion for working Americans. The US capital markets is at the heart of the wealth that that country has created. And if anyone had any doubts about this, then this statement by the then chairman of the Securities and Exchange Commission, Jim Clayton, should actually assuage any doubts. And this is what he said: our capital markets, including the broad participation of the public in our capital markets, are the envy of the world. No other country has anything comparable. They want it. They come to see me to ask me how to duplicate it. Why? Because it is the competitive advantage for our economy, and our capital markets have made many American lives better. Improving our markets to facilitate public participation has been a decades-long endeavor between the SEC and market participants. It is more important than ever that people save and invest for their own futures. It is here that access to personal investment advice to help cut through the jargon and patiently encourage people to put a little bit away here and there is of critical importance. You can see that statement refers to the broad participation of the public. Those are retail investors. In fact, it is not often known that the retail investors are the ones who drive the American capital markets. And there is no reason this should not be the case in Africa and in our case in Kenya. Because if you look at this data, we have over 18 million working Kenyans, 85% in the informal sector, 15% in the formal sector. This community of wealth owners have tied 12 trillion shillings in illiquid plots in the Nairobi metropolitan area. That is Kenya's entire GDP in just the Nairobi metropolitan area. Now, this could be sitting in the capital markets generating true and real wealth and liquid wealth for many of us. And of course, historically, a lot of us have lost billions to real estate Ponzi schemes and unregulated private investments. The capital markets provide you a safer space to invest because there is more transparency and there is oversight. And indeed, as you saw from the quote from Jim, lessons from developed countries highlight the importance for Kenyans to invest in well-regulated, high-quality capital markets products. In fact, if you look at any single developed country, the one thing you will see is very, very deep and active capital markets. It is not a coincidence, because that is where actually we can generate true wealth for ourselves and our country. And that's why I have always remained very passionate about investing through the capital markets. Now, moving away from the big picture to Vuka and where it's placed in the investment universe, when you decide to invest, there are various asset classes that you could invest in. As you can see in the first table, you have public markets which offer equities and fixed income, and those include unit trusts. Then you have this whole space called alternative investments. Alternative investments is fairly new from a global perspective, maybe last 50 years. But what it has done is offered diversification away from equities and fixed income. And within the alternative assets investments, of course, there are many types, but broadly, there are four: energy, private equity, infra, which is infrastructure, and real estate. The one thing you'll note about alternatives is they require a lot of capital to invest in. So if you look at real estate, for example, you can go in a direct way. You can go through what are called securitized collective investment vehicles. And that's where asset-backed securities or REITs and where our product Vuka falls in. And if you look at the last table, what you will see is that REITs or even a product like Vuka falls right about in the middle of return versus risk. And as you go up the curve, it gets riskier and riskier. And of course, it doesn't mean that you do not invest in stocks or commodities. We are just saying because it is critical to diversify. We're just saying that that's how broadly the returns work. Obviously, as in all things in life, there will be exceptions, but that's about where it lies. And I always say that this is very important because, sometimes as Kenyans, we try to be alchemists. We want to make a lot of money very quickly. And usually that's a recipe for disaster. If you look at true lasting wealth, it's built slowly by slowly with moderate types of returns. And that's why it is important to think long-term when you think about your investment journey. The REITs that we founded in 2021 are the first real estate securities in Kenya to be offered in Kenya. They basically offer fractional ownership of properties. So you're a part owner of a large portfolio of properties in a REIT, which units that you hold, you can trade them when you do need to trade, to buy or to sell. So that creates a real estate security, which is asset-backed. There is an asset behind that unit that you're acquiring in the REIT. So that is a journey that we've been on, and so far it's proved that it is working. The reason, of course, we went this route is the fact that REITs are regulated and transparent. And this is very important because in Kenya, again, there are a lot of people selling unregulated products to retail investors. And when things go belly up, they find that they are just exposed. And of course, real estate can, especially direct real estate investment, does not have sufficient transparency. But if you look at a product like a CMA-regulated REIT, you have to be extremely transparent. You have to report regularly to the regulator. Twice a year, you have to publish results. You can't be doing things chini ya maji and then expecting that nobody is tracking what you're doing. It also enables us to get investors who are very diverse, from retail investors to institutional investors to banks and other financiers, as you'll see later. It is important for REITs to be clear on their distinct strategy and asset type, and that's part of the reason as well our REITs are very specific, in this case, to student accommodation. The benefits, of course, to investors is they come with fixed income type returns, capital preservation, which is a very important feature of REITs because there is an asset behind them. It is not like a company. When a company goes bankrupt, you're just left with a piece of paper, which is just a share certificate. In this case, even if Acorn was not there today, those assets are there. And they are held in the REITs on behalf of the investors. They have also shown themselves to be resilient, as you'll see. And definitely those who have been in Vuka a long time know that you're able to trade in and out of your units. And most importantly, this idea of diversification is very important, because at the end of the day, today it may be fixed income securities that are giving a high return. Tomorrow it's going to be stocks. The next is going to be something else. So it is extremely unwise to basically concentrate all your eggs in one basket. It is important to diversify, and we keep saying that please get into fixed income, get into your stocks, get into products like Vuka, get into your SACCO. It is extremely important to be diversified. It can protect you in difficult, when certain asset classes face headwinds. Now, having set the scene, then let's move into our business, tell you a little bit more about the business, the strategy, and the future plans. Peter will come later to talk about the financial performance of the REITs, and Matthew will talk about the performance that an investor has had who has invested in the REIT. So I'll focus more on the kind of bigger picture, broad outlook. So my presentation has a few sections. I'll tell you about our journey so far, the tailwinds that are driving our business, which means the positive winds that are driving our business, how we are executing our strategy, and then touch on our longer-term plans. And then I'll hand over to Peter. So today, Acorn is a vertically integrated developer, operator, and manager of rental housing. We are the first such business in sub-Saharan Africa, outside South Africa. Means that what this means, or the jargon means, is that we are able to acquire greenfield sites, develop them, then operate those properties, and manage the investment all in one group. And that gives a lot of synergies that are beneficial to investors. But we do this with a purpose, and our purpose is creating vibrant residential communities through exceptional living experiences that empower our residents to thrive. And we believe, for those who have had the experience of visiting or have known people in Kwetu and Kijani, that this purpose is we are really working hard to fulfill it every day. We've been around for a while, almost a quarter of a century. Started off back in 2001, grew our business, which was initially an advisory business, consultancy, project management business, into a developer. And then in 2015, we partnered with Helios, and we shifted our focus on basically providing rental housing at scale. And we opened our first Kwetu in 2017, issued the green bond in 2019, and then listed it in London in January 2020 and retired it last year. We set up the REITs in 2021, and later in 2021, we launched Vuka on the CMA sandbox. 6 months later, Vuka was out of the sandbox, and now it's a part of the Kenyan investment scene. We then launched our second student housing, Kijani, last year, and that's also starting to catch its own momentum. So moving away from who we are and what we are focused on and our journey, let me talk a bit about the macroeconomic and demographic and economic trends that are really driving our investment. Now, fortunately, every 10 years, Kenya does a national housing survey. So in 2013, the Kenya National Housing Survey was done. It was published in 2014. In 2023, the survey was done. It was published last year. And the numbers tell their own story when you look at urbanization, demographics, and economics. You can see that the urban population is growing. It's now touching 30% from 25%. And by 2050, it is expected that 50% of Kenyans will live in urban areas. So that number will continue to climb as it already is. And even if you don't read the Kenya National Housing Survey, I'm sure you see the growth of Nairobi and other urban centers. And this is being just driven by the fact that people are shifting away from rural living to urban living. And this is, of course, being driven by the urban growth rate. It's still very high. It was 4.3 in 2014. It's 3.75 now, or in 2023. It will slow down, but it's still very high, because if you look at developed countries, their cities their best cities may be growing at about 1%. Turning to demographics, we are still a very young country. The average age, median age, has just moved by a year. It will continue to move up, but even from the reports I saw, by 2050, it will still be under 30. Now, at the same time, the population of under 35, as you can see, it will continue to reduce as we age, but it's very far from getting even to 50% under 35. And when you have 3/4 of your population that are under 35, then you must think that that's where the biggest opportunity for any type of product is. Now, when you look at the economic side, the number of people renting in urban areas in Kenya has increased from 69% to 72%. The renters are growing. So rental accommodation is actually growing. Ownership is actually decreasing. There are many factors. I won't have all the time today to tell you why. It's driven by what the level of urban incomes not being sufficient, the fact that in Africa, debt is dilutive. When you take a mortgage, it's actually you're paying more than the yield of that house, and many other factors, affordability and others. So if you look at the growth from renting growing by that amount, that trend is set to continue, because the fundamentals that are driving that are still existing. Again, people are now spending more on housing and utilities than they were back as a percentage of their total income. Of course, there are factors like people's incomes may have shrunk a little bit, but still it's becoming a bigger part of the pie for most urban dwellers. These trends, as you can see, they are really forceful. It's really, the water is really going down the stream. They are very powerful. And really, we are just riding on these trends in our strategy, as you will see. People often ask us, have you not satisfied the demand for student housing now in Kenya? So the graph on your left shows you the enrollment in universities for the last 23 years or so. The red line shows you the number of institutional beds. You can see they have hardly moved. There are hardly any beds being built. Acorn is still a very small player in the market. With everything that we have, the entire portfolio, it still represents 4% of the total number of students. There is decades and decades to go before you can really satisfy the need. As I'll show you later, we are not intending at all to get anywhere even close to 50% of this demand, but it just tells you that there is a huge need in the market. Now let me turn a bit to then how is Acorn executing our strategy? Let me tell you a bit about that. So the first thing is, when we started this journey, we defined and clearly spent time researching the housing segments, from a global perspective. And as you saw, given the data I've shown you from the Kenya National Housing Survey, it was a no-brainer that the biggest opportunity for providing a profitable real estate business was to focus on rental housing for young people, those aged under 30 years old. And we started with student housing, And as you know, that's predominantly a rental market. This year, we will be announcing our young urbanite housing for the group just after college who have just finished and are now looking for a place to stay that you hear more in the future about. And that's really where we want to focus for the next decade. Of course, most housing in Kenya is the family homes segment. That is the bulk of the type of housing. So there is a lot of supply in that segment, but the demand is muted because the people aged between 32 and 55 is just about 17% of the population. So that's why our focus is there. I suspect that if we were to move to any other segment, it would be senior living, because although that market is small, there is no supply. But that's a story for another day. In terms of our business model, the Acorn ecosystem sometimes confuses people. So let me just try to unravel it a little bit. It consists of three parts: a management platform, which is basically, you can think about it as the brain of where the action is. Then you have the portfolios, which are held in REITs. And that's where all those properties you see, they sit either in the development REIT or the income REIT. I mentioned that we will be launching young urbanites that will go into a new REIT called the Acorn Build to Rent D-REIT. And later in 2027, we will set up the off-taker, the Acorn Build to Rent I-REIT. And the final part of our ecosystem is the investment sources. So we source capital to continue to develop and invest in student housing. The capital comes from about 6 different sources. There is the local pension funds, who collectively today have invested almost 7 billion shillings. We started with just 1 billion shillings in 2021, and it has grown. And then we have also life funds. Then Vuka is becoming an important investor in the REITs. We are setting up a global investment platform for global investors, which hopefully will launch next year, called Ahead. We have a lot of development finance institution partners like the USDFC, Garant Core, Infracore, and others. And of course, as I said earlier, we had done the first green bond. This allows us to raise, it gives us a lot of flexibility in terms of capital raising, whether we are raising equity or we are raising debt. So that's how our business looks like. That's the ecosystem. It consists of 3 different critical parts. In terms of, because this question has been asked, so how does the Acorn D-REIT sell assets to the Acorn I-REIT? We always hear that they are buying and selling. So the D-REIT essentially basically has its own governance structure that has an investment committee. It has an independent valuer, in this case Knight Frank, and an independent external auditor, in this case PwC. And whenever an asset is going to be sold by the D-REIT to the I-REIT, the independent valuer must do a valuation. And by regulations, the D-REIT cannot sell that property for less than 90% of that valuation. On the other side, you have the I-REIT, which is the one which has the right of first offer to buy offtake the properties from the development REIT. It has its own independent valuer, in this case Axis, its own external auditor, Deloitte, and a structural engineer who checks the property is in good condition. So these independent parties always participate in any transaction, and then there is a corporate governance committee for which the sponsor or promoter does not sit in, that has to vet the transaction. And the I-REIT cannot pay more than 110% of its independent valuation. So within those guardrails is how the transactions between the two REITs take place. It's now been tested for the last 4 years, and it has proved to be very robust. We also have a very strong and experienced management team that I am very proud to lead. Myself, Peter, who runs finance. We've got business transformation always happening all the time, and Impresh leads that. Steve Wood is our health and safety director. And then we have Jackie, Sheila, and Matthew. Jackie runs the property management business. Sheila runs the development business. And Matthew, who will come in later, runs the investment management business. And then we've got our HR director. And of course, for those of you who've been in Vuka, most of you have worked closely with Elvis, who's the Vuka growth manager. So this team leads the business and helps the business to deliver returns to investors. So our journey has evolved over 6 phases in the last 10 years. You heard me at the beginning say that in 2015, we partnered with Helios to invest in rental housing at scale. We've done this through 6 phases. The first phase was to build the first assets and do what is called proof of concept to show that actually it worked. There were very many doubters that it would work at that time because they felt that students will abscond on rent or they'll burn the buildings down. But those doomsday scenarios have not panned out. In fact, I tell people the students are very proud of their rooms. Then we went to a period when we did very extensive research with an international research advisory group, validating the market opportunity. And then from there, we started increasing the portfolio, which is the portfolio that we then seeded into the student REITs in 2021. The last couple of years, we've been trying to make sure we get to scale because we can only give investors decent returns if you get to scale. And that we are very happy that we've achieved, a scale that now allows us to start building economies of scale. So what you will see the focus going forward is going to be on driving returns. And that's going to be now the main focus as you will see going forward. So in terms of our market share, how do we see our market share? You remember I spoke about 570,000 students enrolled in university. From the research that we did, when we eliminated those who are below the target income, those who are not willing to live in external accommodation, those not willing to live in mixed gender accommodation, and those not willing to pay, we saw that Kwetu has an approximate market of about 100,000, 106,000, Kejani 124,000. Now, of that, which is about 230,000, which is just about 40% of the market. We call that our addressable market, 40% of the total enrollment. And then that 40% of total enrollment, we have further cut it down, and our target is just to get to about 80,000 beds, or 35% of the total numbers. And that is in every area we build. That's what we are focused on, about 35% of the total addressable market. So today, it's the largest purpose-built student accommodation portfolio in Africa. We started in Jogoo Road with Kwetu. We are soon breaking ground in Eldoret, and we will also be breaking ground later this year in Kakamega. Kejani portfolio is actually eventually going to be our largest portfolio. First one was built in Karen near Catholic University, and we are going to be building one in Kakamega. So that the blue dots or boxes kind of show you operational properties, and the green ones show you those that are still under the development. So it's a total of 20,000 plus beds compared, for example, with Respublica in South Africa, who are around 15,000 beds. So in a nutshell, our ESA REIT strategy for 2025 and beyond is First, on the development side, we keep our projects on track from a safety, cost, time, and quality perspective. From an operating side, we achieve our planned occupancies and net operating income. From a financial side, we want to reduce the cost of debt in the income REIT. And Peter will be telling you that a lot more about that shortly. And then focusing on value creation and investor returns, as I said earlier. So now moving away from the, what we are doing, how we've executed our strategy into more of our longer term plans. Just quickly touch on where we are headed. So we are moving out of Nairobi. You've seen Kakamega, you've seen Eldoret. We'll go to Thika, Embu, Meru. So these are all the Tier 2 university cities. So we are going to enhance our market penetration in that regard. I mentioned that we will start the build to rent for young urbanites soon, so look out for that. And of course, from 2026 onwards, we will have regional expansion plans. So in conclusion, let me say this. I think the business has matured into a market leader in PBSA. As you've seen, the market opportunity is still nascent and the market is still sizable. You've seen the macroeconomic and demographic tailwinds remain firmly in favor of rental housing. And as you will have seen, for those who've seen our results for 2025, with 2024, we are now gaining momentum. And so we look forward to having more of you join us or continue to grow with us through Vuka, and continuing to invest and creating wealth for yourself and for your families. Thank you so much.